Good morning everyone, this is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 22nd of December. The oil glut continues. Oil currencies continue taking a hit as oil prices decline further. Brent crude oil sank to its lowest level since 2004, while the US benchmark WTI stands just above its 2009 lows. On the supply side, with the US and Russia expanding their production, as well as Iranian oil ready to enter the market when sanctions are lifted in 2016, there are few signs that the downward trend will change anytime soon. On top of that, Washington lifted the ban on oil exports established during the US oil shortages in the 1970s, which raised further concerns over the global supply. Meanwhile, the economic slowdown in emerging markets, and particularly in China, has kept the global demand subdued. In a relatively thin market, oil prices remain under pressure, and this continues to weigh on oil currencies like the Canadian dollar and the Norwegian krone, which print new more than a decade lows against the dollar. On the other hand, the low oil prices could increase the disposable income of consumers, which policymakers hope may translate to upward pressure on inflation through increased spending. As for today, the highlight will be the US final estimate of quarter 3 GDP, which is expected to show that the US economy expanded at a 1.9% quarter-on-quarter seasonally adjusted annualized rate, down from the second estimate of 2.1%. Even though this is the final estimate and usually not a major market mover, following the Fed's first rate hike in almost a decade, it could undermine the Fed's view that the US economic activity is expanding, albeit at a moderate pace. Despite this data being outdated, the possible slowdown could hurt the improving outlook, and along with a thin market today, could reverse some of the dollar's recent gains. The third estimate of the core personal consumption index for quarter 3, the Fed's favored inflation measure, is forecast to have remained unchanged. A possible surprise in the figure could affect the pace of future rate hikes, which Fed officials have stressed will be gradual. The existing home sales for November are expected to have increased, but only marginally. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.